of a big rate cut decision coming up this Wednesday. We do want to stay on this topic, particularly about the impact of the Fed easing cycle. Bloomberg's Nina Trentman joining us right now. She had a chance to speak with bankers, strategists, and CFOs about how they are navigating what we think is going to be the Fed's path forward. And I always say think, because we're always just assuming that all these rate cuts are coming and God knows what the heck Jay Powell's going to do on Wednesday. But you had a chance to catch up with some of these folks. What are they saying?
Well, we are seeing, of course, companies are positioning themselves, thinking about what do lower interest rates mean for my business? What do they mean for the fixed rate debt that I have? What do they mean for my cash? So it's a plethora of decisions that companies will have to make once they know how much the Fed is cutting and also how much it says it will cut going forward. One interesting point was in terms of data that we received for our the upcoming edition of CFO Briefing was this, that companies are already making plans and changes to their treasury portfolios. Mm-hmm. So they basically, even though we know the Fed is likely cutting on Wednesday, we know that they've already started making changes. So Clearwater Analytics, which is a company that tracks treasury investments of about 400 companies totaling about $1 trillion, so quite a significant amount of assets. They found that companies have already started moving into longer duration assets, so into corporate bonds, into US government bonds, and sort of have shrunk the amount of money that is allocated towards money market funds and also other short-term instruments. And so, of course, that is interesting to see, because it's not just what is the Fed going to do, but also what do companies think makes sense. And so what this data is telling us is very much this, that corporates think it's good for us if we go into longer duration assets to hold on to those higher returns a little longer.
So what does it mean, though, if I'm a CFO? Do I want to issue more debt like before an election, or do I want to wait until we're into the cutting cycle and then issue more debt?
Well, if you look at the markets right now, then I guess people will tell you that they want to issue when the market is good, which is what we've been seeing for the majority of this year. Basically, we've seen pretty strong debt markets, even though we have the looming election. What I've heard from bankers for the most recent edition of CFO Briefing was very much this, that people are saying, well, if we get a clear election outcome and we know who's going to be the president soon after the election and markets respond positively, then we could see a continuation of that pull forward issuance, which of course you would think, well, interest rates are high, why wouldn't you wait? But then of course it's not just the coupon rates that people are looking at, but also the spreads, and they want to find buyers for their debt.
I'm curious, I mean, you mentioned them kind of going longer duration here. We've been obsessing a lot over this sort of record amount of money that we've seen in money market funds. We don't primarily talk about it from the investor perspective, individual investor, institutional investor. Corporations, though, have also been piling into that, and they've stayed in that. Is that money coming out already?
Well, some of it is. If you look at the Clearwater data, then, for example, at the end of March, 30% of corporate treasury portfolios were allocated to money market funds. Now that stands at 28%, and of course that is sort of like only a 2% decline. But if we're thinking about how much money that is of course a sizable amount that is coming out. I think over time, corporates will probably allocate a certain amount to money market funds, just because it's a pretty safe investment. You also have a lag effect where you can hold on to the returns that you get on a money market fund a little longer, even if interest rates come down. But I think it's going to remain part of the portfolio,
All right, Nina Trentman, a closer look here at what corporations are potentially doing with their cash ahead of the big Fed meeting. Of course, Nina leads our CFO Briefing newsletter, which is devoted to corporate finance.